Good afternoon, everyone, and welcome back. This is Daily Trend Analysis with a quick market update. Today we got continuous jobless claims and initial jobless claims. Initial jobless claims came higher than the previous one and less than expected. We expected 240 and we got 230, but again, a little bit higher than the previous one. So more people claiming jobless is good for the current situation. And continuing jobless claims came way higher than the previous one and way higher than expected. We expected a little bit increase, but we got 1671K. So that was at 8:30, 1 hour before the market opened, and I think that was quite positive. So let's see how the market reacted today. We opened selling off. We were during pre-market, we were more or less with overnight longs. But look at this. It was selling off after the open. We got a nice bounce of priors yesterday's close. This is a big level, and also settlement. We started to show signs of maybe some support. And look at this. This is what I usually watch. This is a bullish divergence. So price action, price going lower, and RSI getting higher, going higher. So this is bullish divergence, price going lower, and this indicator going higher. And I am for sure, I would have for sure looked at this and maybe take some positions on the break of this pivot. That was a nice trade. And look at this, we broke hot and high of day, and we went higher and higher, always respecting this 45 MA until the point of control, this yellow dot line, flipped to the upside, and we are now seeing some weakness, but still high on the day, 1% on the Nasdaq and 0.65% on the S&Ps. So quite a decent day for now. We will see. We are again bouncing off this blue dot line that is last week low, but I think we are trying to hold these levels, and any positive economic data is taken into account until next week. So what else is good? Apple is 1.20%, Microsoft is in the green, Tesla still seeing weakness, minus 2.45%, and look at this. We are again seeing a lot of weakness, and we can see again a new low of the year. People still discussing about Elon Musk, Twitter, and his deals with Apple. And I think people are starting to lose faith on Elon Musk, and that's affecting Tesla. Not only, obviously, Twitter is not anymore public, and I think we are starting to see weakness again in Tesla. Double top, rejected again, this 200, and we are seeing again weakness. Filling this gap, we can remove this gap, and Tesla is the only one apart from Google that is minus 1%. Tesla and Google, Amazon is also consumer discretionary, but is seeing 1.23 in the green, is seeing some beats, but overall the Nasdaq is good, but Tesla is seeing a lot of weakness. XLY, consumer discretionary, trying to hold these bottoms, and defensive sectors like healthcare and staples are still holding. So I don't trust this holding these levels. I would like to see again higher highs, and some sectors, defensive sectors, pulling back, but at least the dollar is also weakening. We are seeing again rejection of the 200 EMA and confluence of the 200 SMA and EMA. This is a good spot to take some shorts. The dollar is seeing weakness, but again we are seeing strength in the yields, and people are still trying to find out what kind of terminal rates will Fed put in place for 2023 next year. Right now, 2-year is 0.63% in the green, and 10-year is 1.37 in the green. What kind of terminal rates markets are pricing in? This is next year's April 2023 rate 4.86. That remains at that level, 4.83 in September. So all the summer since April until September at 4.8. And then in December, we are seeing interest rate cut. We are pricing in one cut for 4.5% in December next year. So next year is going to be tough, 4.8 to 4.5% throughout all the year. And people have no idea what is coming. So that's the fear of the investors, the fear on the recession that these high interest rate hikes are going to put on the economy. Economy is right now sick, and it will be more sick next year. We will feel the pain for sure. Crude oil is still following to the upside, continuing to the downside, and is 0.25% on the day. We saw a big push until this 75 that got rejected again. So short sellers were waiting for this 75 level for sure. And this is good. I mean, I like crude oil being this down. But natural gas, Europe is increasing. Fears of this winter are increasing in Europe. So we can see natural gas slowly pushing up. This is fundamental change. We were expecting some kind of a bounce. We will see if the 200 and these levels at 6.7 shorts are waiting here, and we can see some supply again. But I think with this winter coming in Europe, we might see some weakness. Some strength on the natural gas for that. And metals, copper still pushing up, silver still quite bullish, and platinum, it's also holding these levels. So again, we are seeing a little bit of push after these jobless claims today. This is nice to see, but don't get me wrong, be careful with your expectations, because I think this is just a matter of time that we will find again weakness depending on the economic data and PPI tomorrow. Next week is going to be super important. We have CPI and interest rate decision. So be patient. Today's bullish move is nice to see. We are holding this pre-market pivot. We are holding yesterday's high, and we are trying to reclaim this point of control and move higher to high of day. So really nice to see this strength. We are holding these levels. Watch out for this volume up here, because maybe these are all shorts accumulating up here. But enjoy your runs if you are long, and be careful the rest of the day. So as always, thank you for your time. If you found this video useful, please remember to click the like button and subscribe to the channel to receive notifications when I upload new videos. Remember that I upload new videos every single day for market forecast, market updates, and market recap. I appreciate your time, and see you in a couple of hours with the market recap. Remember, the trading day is not over yet. Discipline and risk management are key for success. Stay safe, everyone.